the prior swing high up here was available. So you can see that real money liquidity at 1702s, 1702s, 1702s. The price then smacks 1702s. Sellers come in, but the book actually goes more bullish. Do you see that? The actual short-term book goes really bullish at 1702s. Well, that's something you know what's going to happen next. It's going to squeeze through that level, isn't it? So you can't just lean against a level. There's got to be a storyline attached to that, isn't there? And the storyline is negative for that short. It's actually a buy trade at that stage. So you're looking at that saying, okay, well, the short-term, the long-term liquidity is there, but the short-term liquidity is improving on the bids here, and I think this price is going to squeeze, and sure enough, the price did squeeze. You can start seeing they put liquidity in just here. The book liquidity is still bullish, and then they put liquidity in at the same price in that area. The price goes above, and then the book goes bearish. Short-term book is now in line, Rick, with the longer-term key real money seller levels. So when we see that, we can start to say, well, when I see that sell coming in, I'm now looking at it from the point of view of, well, let's do business. There's the sell trade. It's now 1703.5. And obviously that 1703.5 was the perfect sell on gold. It dropped down to 1701.5 before we got that big block buyer there. And you can see a block buyer came in at the bottom edge just down in here at 17 handle, which you would expect anyway. That's not a surprise, that one. And that's how you work how you work your prices. You start watching for the big levels, but you've got to have confidence in what else is happening. When I see liquidity, for example, the 17 handle, of course there's going to be liquidity at 17 handle, but I can't do anything about that if the book's still very heavily short and it's getting shorter by the second. And obviously when we see the price then coming in with a big block order, remember activity at these prices is what's important. We don't really get any reason to be interested in this except for the fact that it's now swept the stops above us. So you can see the next liquidity on gold just into this level here, for example. And it's always worthwhile just marking these areas when you see these extremes, marking these prices so that you know areas. You can see this liquidity starts showing up, this liquidity shows up, this liquidity shows up. So you're starting to watch this and saying, wait a second, there seems to be a consistency in the application of liquidity through this price area here. I want to pay attention to that. And as the price then retests into that area, you can see that the selling comes in away from that price area. Now, it would have been nicer if we'd got a big green block at the top edge to lean against, but that didn't happen, and that's sometimes what happens. You don't get everything you want. When the price hits into this area, you're watching for the book going bullish, or watching for big blocks. You know that it's generally going to be a type sweep type trade because of the 17 handles involvement, which is obviously just directly below you, which is into this price here. It sweeps the stops to 17, the price starts turning, the book starts buying, and the price goes up. The price starts turning, the book starts buying, and the price goes up. It happens all the time. It's just the way it is. It's the way it should be. And that's how you can make sense of what's going on in the background. You're just marking areas that have an interest for you.